Did you ever wonder how Barron's comes up with its stock picks? After spending the first 8 episodes of Unboxed explaining the world of meme stock mania and rapid trading, I want to do something a little different. I am going to take you behind the scenes and show you how Barron's analyzes stocks to hold for the longer term. Different analysts and investors have their favorite methods for sorting through potential investments, but it often comes down to looking for underappreciated stocks hiding in plain sight. So, with the holiday season in full swing, it may be time to take a look at a stock that touches all aspects of the retail experience: Mastercard. Back in October, my colleague Jacob Sonenshine said Mastercard was ready to rally thanks to an expected rebound in cross-border travel. And for a few weeks, that proved to be the case as international travel restrictions were eased in early November. For perspective, recent data show that cross-border transactions are at roughly 75% of pre-pandemic levels, implying ample room for upside. But then the Omicron variant of COVID emerged in late November, dashing hopes of a return to normalcy. Mastercard stock tumbled on the Omicron news, but has recovered a bit. It was recently trading for around $340 a share, with a market value of $334 billion. And there's reason to think the company is more than a reopening play. It's also emerging as a fintech play.
Mastercard is really just one of those companies that is growing earnings at a much faster clip than the broader market is in most companies. You're looking for earnings to compound roughly at a 30% rate over the next few years. You're looking at pretty good sales growth, but also a little bit of profit margin expansion in the near term. And Mastercard has been reporting every quarter closer and closer to pre-pandemic levels of cross-border revenue. And in the longer term, the company is obviously aggressively growing sales because it is one of the best companies positioned for the shift into digital payments from traditional payments.
In fact, one investor Barron spoke with noted that even if the coronavirus persists well into 2022, the company has the secular tailwinds of online shopping, meaning the stock functions as a reopening play and a stay-at-home play. In addition to digital payments, Mastercard has also recently delved into the increasingly popular buy now, pay later space. US payment volume for buy now, pay later has been surging. It accounted for $39 billion in 2020, up from about $3 billion in the prior year. And some analysts expect that buy now, pay later volume will exceed $100 billion by 2024. And while a return to normal travel patterns may be a ways off, Mastercard could benefit near term from the fact that US consumers are in good shape and sitting on a lot of cash.
What we do know from holiday sales data is that the consumer is in incredibly strong position right now. You're looking for holiday period spend of about 11% growth over 2019 pre-pandemic holiday. Just to compare that, in 2019, we had year-over-year gains in sales of just over 3%. So you are looking at a consumer that's in very good shape.
With an eventual return to travel ahead and a strong holiday season, Mastercard is a stock to watch.